viewers, and welcome to the channel. In this week's video we'll be discussing Redbubble, which is a bit of a hot topic after its very positive quarterly update, which saw the stock bounce by about 10% just a few days ago. I think the first chart which is worthwhile seeing is the chart versus the ASX 200 accumulation index since listing for Redbubble back in 2016. Really shows that really until the pandemic, the Redbubble story has been largely ignored. It's actually been down for the majority of the time, and as markets started to fall off in February, it fell with them, but as evidence of the shift to online spending and general e-commerce improvements, that has flourished and is now up over 300% since listing, and even more since its lows in February. I thought the next chart would be worthwhile showing is the chart of Redbubble versus Etsy. So Redbubble is effectively just an online marketplace, not too dissimilar to Amazon, but it specializes in artists selling their products online. So quite a niche market, but there is, I guess, precedent that we've seen on the market, and that's in Etsy, which is a very similar style company in the US, much bigger name there, certainly a bigger brand. And since Redbubble's listing rather in 2016, you can see that Etsy's popularity and growth has been well reflected in its share price. I mean, even up until the fall in the market was up, over 600% over the last 4 years, and certainly that trajectory has continued and accelerated after the pandemic has hit. But you can see how far behind this trend is. So certainly the opportunity is there if Redbubble takes advantage of the current environment, grows its brand. It's also a global marketplace as well. So it's not just in Australia we're talking about. They do have a worldwide opportunity here, not too dissimilar to Etsy. So certainly not suggesting that it will one day be as big as Etsy, but the opportunity is huge, as can be seen by those charts. Just a few slides from its recent August full-year update. Look, nothing completely shocking in these numbers. Exactly, what we've been talking about in recent videos about the accelerated trends in technology, but e-commerce is certainly one of those. In early this year, e-commerce was trading at about 9% of all transactions, and that is now up to 31% by August when this was released. Meanwhile, store-based retailers have been plummeted to down 26 at one point, but down 11% from where it was. And as they've said, this is equivalently of 10 years of growth achieved in 3 months. And not surprisingly, a lot of these companies are suggesting that there are signs of a structural shift that's going to endure beyond this pandemic. And I guess that's a real question. Are the customers that these e-commerce businesses winning, are they going to continue to shop at accelerating rates in the future when the pandemic is behind us? That's the main question on whether these stocks, I think, are good buys or real value traps. Again, no real surprise in this. The revenue growth has been absolutely spectacular, which is appropriate given what we've seen from the share price. In fourth quarter FY20, which had at least the full impact of the pandemic, we saw a 107% increase in revenue, 132% in July, so that's actually accelerating. And the recent update that I mentioned from a few days ago was effectively another upgrade. So momentum for this business is incredible, and really there's no sign that it's stopping yet. This is another important thing, talking about the attraction of the business from other markets outside of Australia. Shows a real opportunity elsewhere. The big part of it here is Australia, which is growing, as you can see, significantly, but these other markets are not insignificant. So if it can gain traction, build its brand in other markets, given the scalability of this business, the opportunity remains very exciting. That's it. So I will just kind of sign off with a little bit of a summary and say that, like these other tech businesses I've been talking about, the scalability of these businesses is what attracts me. They have high fixed costs, so they don't really run at a profit in the early years or when revenue is not that high. But once they hit critical mass, the vast majority of new revenue that comes in, flows through to the bottom line. The margins improve the higher the revenue goes. So that's why they're starting to get such high ratings, especially in an environment of low interest rates where the discount rates used to value future cash flows is being reduced. Me personally, why I probably aren't as excited about Redbubble as some of the other names we've talked about in recent weeks is I'm not sure about the sustainability of these customer acquisitions. Yes, if I were a customer of Redbubble because of the pandemic and have enjoyed the service, I might continue to use it. But am I going to use it as much as I have, or may I one day drop off? This is a bit of a niche marketplace here. The sort of the thing where you go to your local market, or so certainly these sort of stores exist in shopping centres. Will one day people be happy to go back to their local shopping centre and look around and find these sort of products? Very possibly. I don't think it's necessarily a trend that is likely as sustainable as some of the other ones I've talked about, such as cloud computing. So great business, great story, great opportunity, but I have my question marks, and considering how expensive it is, probably for me with a limited amount of capital, I wouldn't say Redbubble would be one of my picks. Anyway, that's it for today. Thanks for viewing. If you found this video useful, don't forget to like and subscribe, and be sure to leave any comments so we can hear your thoughts as well. Thank you very much.